Now that we have contrasted different forms of finance to better understand what is project finance, let me tell you a word about the condition of success of project finance. There are seven conditions. The first one is to isolate an asset that is not encumbered in any way by any collateral through a past transaction, so free of any charge. The second is to ensure that when you transfer the asset to the project company, this asset is transferred under a true sale regime. The third condition is to generate, for this asset, to generate self-sustaining revenue to justify its independence. It's normally ensured by the concession agreement or the agreement you sign with the public sector, because obviously this agreement will give or define the parameters of the business model of the project. The fourth condition is the earmarking of revenue necessary to repay the liability of the project, be it loans, bonds, and among the liability, obviously, I rank the fact that you need to pay a decent return to the shareholders. The fifth condition is to string and bind a good partnership with your partners. And the sixth condition is based upon the fact that all these partners should have an alignment of interest on the view. It's a long-term view, necessarily a long-term view. The seventh condition is finally the alignment of interest on objective of returns and risk of all the partners. Let's now have a word on the benefits of doing project finance. Again here, 7 types of benefits. The first benefit, as I said earlier, is leverage. It is better off to do a transaction with partner and syndicate the risk of the project rather than bear the whole risk of this project on your balance sheet with the risk of, and with a chance, most likely, not to be able to afford a series of those projects going forward. The second is the fact that the debt load could be a real issue for a single balance sheet of a single company. By opposition, a debt load financing this project for a specifically dedicated company is ensuring, most likely, the success of the project. The third is the fact that because we isolate the project with its own cash generation capacity, we can also better price the risk associated with this project, because this project is not polluted with other type of project the company could have undertaken, and as such, because it's an isolated project, you can be able to present a clear picture to the outside parties through which you would raise funds. And obviously this will have an impact, a positive impact on your cost of capital. And a single asset company, a single special purpose company would achieve such a goal, whilst a corporate entity with a commingling of all the risks and resources will have much more difficulty to sell and to pitch reasonably this type of project. The fourth is the fact that partnering with others, you leverage the skills and competence of the others. You obviously bring your own competence, but others bring theirs. And you create a dynamic of replication for other transactions with the same partners. Potentially, if it's a success, if you like your association, there is no reason why you should not replicate such an association for the future. The fifth is deconsolidation. Deconsolidation is key for project sponsors, for the reason that setting up an SPV, special purpose vehicle, that will bear the assets and will finance these assets, and the debt associated with the project will not be consolidated with the corporate balance sheet. This simple fact helps you to achieve the consolidation and potentially be able to participate further in future projects. The sixth is obviously the fact that partnering, doing it in a special purpose vehicle with others will allow you to potentially win a project you could have lost on your own because you wouldn't have had all the competencies in-house and you wouldn't have probably have the capacity to raise as much money as you did in the project company. Finally, by doing such a project finance scheme, you build your own book of reference. You participate to numerous bidding contests. This is a major advantage of project finance.